What's up, everybody? This is Steve Williams, president and founder of the creditrepairshop.com. In this video, I'm going to quickly talk about some things that I'm seeing in 2018 when it comes to debt collection and the strategies that they're using. I've talked about it before, but I want to just make you more aware of it just in case you are running into any problems with debt collection companies. Keep in mind that when a debt collection company, if there's levels, if they purchase a debt or if they're assigned to collect a debt. Let me tell you the differences between them. If they are assigned to purchase a debt, that's when a company has either hired them as a third party and they're going to allow them to collect on the debt, and they might pay them a commission or they might just pay them an overall retainer fee, and no matter what, they're going to be able to collect the debt. Now, when they pay them a retainer, what usually happens is that the original creditor will say the minimum that I'll accept is this amount. Sometimes, depending on what type of debt it is, they won't even take any amount lower. It just depends on the creditor. But if they're assigned it, there's no incentive for the debt collector to go down and negotiate, or to, they might go back and forth with the original creditor, making submitting offers that you made to them, but they'll usually have a set amount that they will allow them to go down. And if you outright ask them, they'll tell you. Now, if the debt collector has purchased the debt, what you need to do is you need to do a full validation of the debt to make sure, number one, that it is still collectible, because it could have passed statute of limitations according to the laws in your state. And also, this will help you find out if they provide you all the paperwork. You can get some type of range on what they maybe have paid for the debt, because some of the times, depending on who gets it, they might send you with the records, because they have to follow the law on this, and most companies will do the right thing. They're going to send you all the documents on how they purchased that debt, and they can't make up fake documents to show how they got the debt. They have to show it to you. So usually it'll come in a big stack, and they'll block out all the other people's names, and then you'll see your name sitting there. When you see something like that, you know that they bought it for a lot less, really pennies or dollars. Like they could have bought $1,000 account for a couple of dollars or $50. It just depends on what type of account it is. And also, in that business with the debt collection companies, it's getting very competitive, where there's a lot of companies opening up and they're going after. So they're even having to pay a little bit more for the debt that they used to buy, because there's so many companies that's out there doing this. A very lucrative business. But when you get that information, then you'll be in a better position to negotiate to settle that debt. Now, something that I had talked about with repos. I was going through some paperwork, cleaning out stuff out of my home office, and I had ran across from years ago where I had paid off my wife's Range Rover, and there was a document inside from the bank that said if you had paid for any gap insurance, or if you had paid for any credit insurance, to make sure that you contacted the dealer, because they could owe you a refund. Now, gap insurance, that's where if you buy a car, we all always hear the stories. You buy a car today, and then you drive it off the lot, and then that vehicle is not even worth what you had just paid for minutes ago. And then we've heard the stories of where people had drove off the lot, and then they got into an accident, and then when they owed, if the car was totaled, they were surprised, because they were like, the insurance wouldn't even pay what I just paid for the car. So what you need to have is gap insurance. That's how people protected themselves. The gap insurance would pay the difference between what the car is worth and what you still owe on the loan. But that most people know about that one, but what I've always been talking about when it comes to repossessions, because we've had this come up from time to time with clients, is that the credit insurance program. And a lot of people, have said that this doesn't exist. You can type it in online. You can call your car dealer, or you maybe even could look at your contract and see that it was automatically added onto your loan. This is where, if you're not able to make the payments on your vehicle, that insurance policy will either make a certain amount of payments, or it could actually pay off your vehicle. And a lot of people don't know that that happens. And I talk about the elderly customer that I had years ago when I first started the credit repair shop, doing customers instead of just doing business customers. And she had that Cadillac where her husband was dying. He bought this new Cadillac because sometimes people just do things like that. When they know they're going to die, they're going to go out and buy things that they always wanted. Well, when he died, she was left with the Cadillac. They came after her for the payment. She couldn't make the payment, gave the car back, and it went through the repossession process. She came to me as a customer because they were going to garnish her wages. She was working as a security guard. She was like almost 70 years old. And I said, let's look at the contract. Looked at the contract, and we saw that it had the insurance policy on there, but it wasn't to pay off the entire vehicle. It paid a certain amount of the vehicle off, but she didn't even know that that was on there, and a lot of people don't know that that exists. So look at your contract. If you had a repossession, look at your contract and just see if it possibly had that insurance policy put on there. You could have signed for it, especially if you have a high risk, bad credit, or medium credit auto loan. They will ask you sometimes, do you want this? Some of the times they'll automatically put that on there because they know that a lot of the people that have went bad on other auto loans could possibly go bad on a new auto loan. So if you have any questions or problems, put your comments below. Share these videos. I really appreciate it. And if you ever need assistance with your credit, please contact us at thecreditrepairshop.com, and we'll be happy to do a free evaluation of your credit reports and see how we can help you. Thanks a lot.